Good day, everyone, and welcome to Forex Street webinar. Today, it's the importance of using profit stops. My name is Nenad, and I will present you with different tools, how you can manage your profit stops, and of course, setting stop losses on the exact place. This is education provided by me. I'm a part of Elite Currency, and this is a part of Forex Street and ECS cooperation. Definitely, guys, you need to have a very good knowledge in price action trading, market analysis, risk management, and trading psychology. When you combine these four things together, you will always receive the best possible outcome when trading Forex market. Today's agenda will be about stop losses, equity risks, and profit stops. So pay attention to this closely. This webinar is being recorded and it will be uploaded to Forex Street YouTube channel. So let's start first with stop losses, the difference between various stop losses. Let me tell you that basically we have different stop loss techniques. The first technique that is very widely used in trading is called technical stop. Basically, technical stop is placing your stop loss below the last swing low or above last swing high. Of course, depending on the direction on the market. If we go long, then we usually place stop loss 5 pips plus the spread below last swing low. If we go long, if we go short, we place stop loss 5 pips plus the spread above the last swing high. And this is important to know because especially if you have the confluence, okay, then you should always see the exact stop loss placement. Okay, just let me check the sound. Okay, so swing high low candlestick formations. Now, candlestick formation is something that I will show you just after I finish with this slide. I will show you the real chart example. Candlestick formation is also one of the valid tools for a stop loss placement. Candlestick formations are very important in intraday trading because they usually show us historical and now moment buyers and sellers. Placing stop loss above or below the most obvious candlestick is also one of the techniques we use to place technical stops. So we don't always need to use swing highs and lows. We can also use candlestick for placing stop losses. Technical stop is the most common way to use use the stop loss in the most advanced way because technical stops are something that also banks use. Of course, banks don't trade on 1 hour charts. Usually banks trade on 4 hour and daily time frames, but intraday traders can only profit from volatility if they trade on 1 hour charts. 4 hour charts are reserved for intra-week traders, while daily charts are reserved for traders who keep their trades running usually over a couple of weeks, even a month. Technical stop is, and it still is, the most advanced way for placing stop loss on intraday time frames. So let's see now, guys. I will show you my chart. Have in mind that my account is connected to my FX book. So if you want to check the performance of my Camarilla MACD MTF, you can always go to my FX book, search for Torrential FX Camarilla MACD, and you will see my FX book statistics, 6 months currently running on my FX book. And of course, we run ECS.live service giving live trading signals each day. So this is, guys, this is my main template, coded indicators completely. You can see how they show entry positions in a very, very, very nice and advanced way. So let's say we traded, for example, I will use this example. Yesterday, I sent trades to my trading group that we should short GBPN exactly at this spot. Basically, what happened was there was a spike related to Brexit that was purely fake out, because usually after some news, you will see that price spikes. It's called algo trading, and algo robots are immediately trading after the news, putting the spike and the pressure on the price, but usually after it happens, it reverts to its original intended direction. So I knew that this was gonna drop, because obviously this was the downtrend zigzag, and we shorted it here. Now, where should we place our stop loss? If we placed our stop loss exactly at this spot, okay, it would be very valid. Why? Because this is the last swing high is actually 141.70. So we place it 5 pips plus the spread. The spread here is 4 pips. So it's actually 9 pips. So 141.79 is stop loss. Now, guys, this is very important. Unfortunately, a majority of traders out there have totally wrong idea about Forex market. Forex trading is effectively trading the risk. So if your stop loss is, let's say, here is total of 85 pips. It doesn't matter, guys. It can be 15, it can be 25, it can be 85. The point here is how much risk you're willing to put into this stop loss. So if I use, for example, one of the scripts, money management calculator, and I want to use 1% of the risk, my account now is close to 12,000. So stop loss, I will just show you my account here. Stop loss is, let's say, 85 pips. So the exact lot size for this account is 0.14 lots. If I want to put 3% of risk, it will be tripled. By using correct money management, I managed to actually grab the 6 months of profit on this account. So guys, trading is all about managing your risks, trading with a good method that give you good entries, especially if you trade on intraday time frames. You just need a good method and a conservative money management, and you will be on the winning side. So this is very clear. So this was the stop loss based on technical stop. In this example, we have a confluence of candlestick pattern, last swing high, and Camarilla pivot point. Do you really need anything more than that? Of course not, because this entry was very, very successful, and it made me another entry here, and I made another entry here, placed my stop loss here above pivot point. So guys, it's about technical stops if you trade on intraday trading. Okay, now let's move on. Another way of placing stop loss is so-called percentage stop. It's a predetermined percentage of traders' account. So it's good for positional and swing traders. There are not too many entries with percentage stop, and it's called arbitrary stop loss. I don't like percentage stop. Why? Because if I, for example, entered here again on the same example, if I say I would risk 2% of my account, then I really need to monitor the trade. I need to put my eyes on this trade. I don't like doing it. I always trade with a stop loss. So technical stop is also arbitrary, but with technical stop, you use also risk management, and you use stop loss gap. So if my stop loss gap here is 85%, it's very easy for me to understand how big my entry should be. So if I want to risk 3%, I don't know, for example, stop loss is the same, 85 pips. Then the risk on this is 0.43 lots. If I want to use, let's say, if I have 2% of risk with 20 pips of a stop loss, then my lot size for this would be 1.22 lots. So guys, it's about it. Technical stop loss is much better than percentage, because you combine technical things with percentage of your account you are willing to risk. So stop loss is dynamic thing, while risk is fixed thing. You can place 1% of the risk in 10 pip stop loss and in 1000 pip stop loss. It depends, of course, on the initial lot size you're willing to enter. Equity stop or percentage stop usually use typical stops like 2% for intraday trades, 8% for intra-week trades, 15% for monthly trades, 20% for investments. I personally can afford to lose in between 3 and 4% per day. But because I use Camarilla MACD, my own method, my losses are very, very limited and usually gains precede the losses in long-term or let's say mid-term trading. Now, equity stop or percentage stop, it's more or less the same. It's just definition of how much you're willing to lose of your account if you trade on intraday time frame, intraweek, monthly, or if you trade on daily or let's say weekly or monthly. It's basically weekly and monthly trading is called investment. It's not trading per se. It's investment. You just invest. Now, the final, guys, thing that I want to show you regarding placing a stop loss before we move by, it's important to use profit stop, and I will explain what profit stop is. This is so-called ATR stop. ATR stop is based on the average true range. Now, I will use the example of, for example, I will use the same example. Why not? So you see here. Here we see our proprietary elite currency indicator called ECS ATR Pro. I use for intraday trading, I use a setting of 5 days. And I use always the 5 days for each day when I trade. So let's say that 120 is the ATR of the average of the average last 5 days. So 120 pips is the average true range of GBP in the last 5 days. So we enter the trade. Where should we place our stop loss? It's pretty much easy if you use the calculator. Let me show you. I will open the calculator. So, as I already said, it's based on the equation. 30% of the ATR 5. So, here, so 120 minus 30% equals 84. Again, guys, you see, basically it coincides with the technical stop, 84 pips. It's pretty much, you just need to add, the spread. So if the spread is like 3 or 4, then you add to this number. Okay. Next trade, for example, the GBP dollar. The GBP dollar. Let's say that this was the entry on the GBP dollar here. And this was the high here. So the high of this candle is 30.39. Okay, if we use technical stop loss, it will be 39 plus 5 is 40, let's say 44, okay? And this is 2, so 7 pips. So it would be 46. So we would have like the stop loss of 46 is 25 pips. 25 pip stop for this trade. Now, how much it would be with ATR? 83, so it's ATR of 5 is 83. Then let's use the calculator. 83 minus 30%. Sorry. 83 minus 30%. Yeah, you see, it's basically 58, so it's a little bit higher. Using the ATR stop can be a little bit more conservative, of course, on if you want to go with risk to reward, but it can be very effective way to keep you away from sudden spikes, guys, as we saw maybe yesterday on the GBP crosses. But it's up to you. Again, if you use a technical stop, fine. If you use ATR stop, is fine. It doesn't matter as long as you are profitable. If you go to insert, and here, guys, let me find this. Okay, you can also go with the average true range by default here. Just enter the period of 5 days here. So you see this number, 21, guys. It's not that, usually traders actually can go with this. It's so 0021. So you might use 21 minus 30%, but I don't recommend, because here, guys, let me show you. 21 minus 30%. So would you really use 15, let's say 15 plus the spread, 17 stop loss on 1 hour chart? I don't recommend doing it. If you go to GBPN, it's okay. You see, now we see 2734 last ATR. So you need to use 273. Now watch this. 273 minus 30% equals to 191 pip. Now, this is why I don't use and I don't like the default indicator. You might use this, but I'm true to my ECS indicator, ECS ATR. But you can, of course, experiment also with the default MT4 settings. Okay, now the profit stops, the importance of profit stops. One of the things, guys, why this is very, very important, and I will show you how I do it and how you might benefit from it. It's moving your stop loss in profit. Banks do it. Bank traders do it every time price moves in profit. They scale out of position or they move their stop loss in profit. You can do it by moving a stop loss to break even +1. It's the entry point +1. Or you can scale out, leaving, let's say, removing the half of your trade in profit, and or scaling out plus remainder of the trade you put at break even +1. Let's use the same example. We trade GBPN and we entered here at this spot, 140.96. Okay, the price started to drop. Usually after some 25, 20, 25, 30 pips, I might use so-called profit stop. Now, how do I do it? If the price moved here, for example, this is, let's say, the previous low. Okay, I might move my stop loss in profit by scaling out and moving my original stop loss for the remainder of the trade to 140.95, effectively securing the number of pips that when I entered, it was here in this example, it's 70, but it was less than that, but it doesn't matter, just for example, it's 70 pips, and remainder should, let's say, go to final target price. Each time the price moves in my favor, because we trade on intraday time frames, we need to secure the pips. Just tell me, guys, how many times you were in profits and suddenly there is out of the blue news that spikes your trade, and instead of booking 25 pips, your stop of 35 pips is hit. How many times this happened? 100 times, probably, if you trade on intraday time frames. Because of that, you need to use, guys, it's crucial. Now I'm telling you, it's crucial, guys. If you don't believe me, check my FX book account. I will open it right away because I know what I'm talking about. If other traders are profitable and they have other techniques, no problem, but ask them to show you their my FX book or something. This is it, guys. Wait, I don't know why it's now is blocked. Wait, I will open it right away. But it seems that the platform has frozen somehow. I'm not sure why. The Chrome actually froze. Yeah, not sure why. You see, I cannot do anything here. This is very, very annoying, really. But I hope that you can hear me. Unfortunately, my platform froze. You see, I cannot do anything right now. Let me try to fix it quickly. Okay. Yeah, I'm trying to move the screen, but obviously it's very hard to move. Okay. I'm slowly trying to move it. Okay, here we go. This is it, guys. December 4, May 16, profitable account. But I'm not bragging. I'm just telling you guys one simple truth in Forex market. You need to protect your profits if you trade on intraday time frames. Forget about risk to reward. It doesn't exist on intraday time frames. If you go with old rule, of going with 1 to 2 or 1 to 3 risk to reward, you will lose, guys. Intraday trading is not the same as it was 5 and 10 years ago. 90% of educators and traders out there show you things that are outdated. No risk to reward on intraday time frames. You need to have a good trading method and conservative money management. Remember, money management is the holy grail. Okay. So this is important. Every time market moves in our favor, we move stop loss. This is also one of the examples. Market, we entered here, guys. This is non-repainting signals here from my method. So you can see it. This is real time. I didn't chart it. This is straight away from my method. So here, entry here, stop loss there. Okay. So this is, let's say, stop loss. Our entry was here. The price made a move here. We just move our stop loss to either break even +1 or scale out, putting the rest to break even +1. It's called profit stop. And you can go away from your platform. You don't need to stare what the market is doing. You don't care, guys. Once you take care of your profit stop, you're riding a free ride. This is how we traders call it, riding a free ride. So if you have any questions, guys, feel free to ask me. As I said, this is the overall, guys, the overall, this is not rocket science, but this is the overall education. This is everything you need to know about placing stop losses, risk management, and using profit stops. You don't need to read books about it. This is it. Use either technical stop, or you can go with us with our ETR indicator. Also, guys, Forex Street is selling our course with very good discount, guys. You need to know that. Forex Street recently started to sell courses, and they are our main partners in Forex education, in Forex seminars, and literally in Forex. So, guys, use this discount if you also want to trade with us. See how I trade. You will also receive a month, depending on the package, or 3 months of free. Our ECS Live, our Telegram channel, will be show education and signals. This is it, guys. For this price, this is a bargain, okay? Thanks to, of course, our partners, Forex Street. This is the price now. So, if you're interested to know more about it, just feel free to come and join. But even if you don't want to do it, use this knowledge, guys. This is what I use, what I do when trading. And I'm an intraday trader, momentum trader. I don't care about what other things other traders are doing, simply because I have profits. When traders ask me, Nenad, do you read the news? Do you read other analysis? I don't, guys, because reading too much can mess up with your own mindset. This is the way to success. This is how I am profitable. Maybe there are 1,000 different ways to be profitable in Forex market. I don't know. I know about this. And this is what I follow religiously. I hope that everything was clear. As I said, this webinar is being recorded. It will be uploaded. If anything else you want to know, don't hesitate to ask me. I'm here, always willing to help you out. Thank you, guys, for listening. I wish you a great trading day. Today is FOMC. Be careful. If you are in a trade, protect your profits. Of course, always do it, not just before the important news. Because of these Brexit headlines, always try to protect your profits whenever it's possible. Thank you, everyone. Thank you for your comments. And I love you all. As always, guys, cheers. Trade safe.